Bitcoins. This data is as of March 31st, 2026. So let's look at, was the Q1 a Bitcoin bear market or a buying opportunity? Well, that depends on the data. In this video, we will be looking at first how Bitcoin fell 22% in Q1 of 2026, breaking below three major on-chain support levels. This is, of course, a historically very bearish configuration. Second, we will also look at, despite this type of volatility, the spot ETF balances closed March nearly flat at 1.2 million BTC, and institutions didn't sell. Third, the treasury company profit ratios flipped negative, historically associated with late stage bear markets and oversold conditions. We also saw that realized price at 54K and investor price of 50K held, suggesting that Bitcoin may have reached the global bottom capitulation levels. Finally, we will look at the record negative payroll revisions, and Truflation's core inflation at 1.11% could potentially clear the runway for Fed rate cuts, a macro tailwind for BTC. Some of the key numbers here. In Q1, we had a price drawdown of 22%. The conviction of buyer accumulation remains steady and strong at 69%. And this is the new factor, which is the institutional ETF inflows, which were record 18.7 billion in Q1. Majority was the BlackRock's IBIT alone, added around 8.4 billion. Six. The third part is basically the ETF balance versus price. So if we look here, then the Bitcoin ETF balance held steady despite the price drop. So as you can see, the green line indicates the ETF accumulation, which is steadily going up while the price keeps fluctuating along the way. So US spot ETF holdings remained flat at 1.29 million BTC at Q1 end, which basically indicates that institutions had diamond hands. Fourth, we have the bullish and bearish signals. The bearish signal is at the end of Q3 2025, supply density hit roughly 30%, the highest level since October 2024, and before that, late 2020. Elevated support density near current price levels creates resistance and historically precede further consolidation or downside. Here's the bullish signals. So conviction buyers, we can see that convictions buyers accumulated aggressively, increasing holdings 69% from 2.13 million to 3.60 million BTC, even as prices fell 22%. This mirrors prior cycles with long-term holders absorbing supply during drawdowns and treating the February trough as a buying opportunity, not a panic exit. Third, we have a new emerging market risk, of course, which is quantum computers. As we can see, the non-vulnerable, which is the relatively safer part of the BTC network, is 66%, which indicates that the majority of the risk of quantum computing is not going to affect the majority of the network. Then we have the 25% of vulnerable, and this is the most vulnerable part of the lot, which is stands at 9%. So as we can see that around 34% of Bitcoin's total supply sits in addresses potentially vulnerable to a quantum computing attack, split between coins considered mostly lost P2PK format and coins in reused or P2TR addresses that could theoretically be mitigated. The remaining 66% is non-vulnerable, held in modern addresses types immune to current quantum attack vectors. This is a watchlist risk, not an immediate threat, but it's one every long-term Bitcoin holder should understand. The Bitcoin developer community is actively working on quantum resistant cryptographic upgrades. So what happens next? Price action was unambiguously bearish in quarter one of 2026, a 22% drop, broken support levels, and negative profit ratios. But the underlying market structure tells a different story. Institutions held firm, conviction buyers doubled down, and ETF inflows hit record highs. If the Fed signals rate cuts, supported by softening inflation and payroll data, Bitcoin could see a sharp repricing higher. The 21 shares CIO puts 100K back on the table by year end. Whether that happens depends on macro, not the market crypto itself.